Well, welcome to the Red Chair. Nenad, great to see you.
Thanks for
Welcome to
having me.
Indico.
Thanks for having me. Great to be back in
Always,
Lisbon.
always good to see you in Lisbon. Good to see old friends.
I know one of these days we need to go surfing.
Absolutely. I'll go every weekend at least.
Lucky you. Not much surfing in London.
Well, there will be a swimming pool with waves,
Yes,
soon,
I want to try one of those.
I hear. So tell me, who is Nenad? You have a long story in VC, but where did it all start?
Yeah, someone referred to me this morning as the dinosaur. So you need to think about your phase 3 at some point when people call you dinosaur. So I have been working together with Steve at DN Capital now for 25 years. We left our jobs actually about this time in 2000. And
At the height of the .com boom.
at the height of the .com boom, and then at the height of the .com bust.
Exactly.
And then to top that off, we had 9/11.
Yes.
Just after we had the first close of our first fund.
Lucky you. You could have never made it.
So our target was 100 million euros. And basically we ended up with 47.5 million euros on our first close of Fund 1. And there never was a further close. So that was our Fund 1. 25 years later, we're now raising Fund 6. As I mentioned earlier, we're almost complete with that. We now have about 1 billion euros under management. And it's been quite a fun and interesting 25 years.
So you went through the .com boom and bust. And so what kind of companies were you investing at the time with that Fund 1?
Yeah, so Fund 1 was an interesting fund. We were really trying to find our way with that fund. So I think we only made about 14 investments. And we did a little bit of combination of early stage as well as late stage. And what we found was that our fund was a little bit too small to do late stage. And so the late stage investments were all the ones that nobody else wanted to do. So those were not the best companies for us. So where we actually did really well was going early stage. So a company like Shazam, where we went in very early. In fact, spent a lot of time with that company helping build the management team. So building probably half the team at Shazam, I was responsible together with Andrew helping to build, taking them into the US market, introducing them to US customers, AT&T, Verizon, and also actually indirectly introducing them to Apple, which was the biggest game changer in the company's history. So so that kind of set the scene for our second fund. We realized we were not big enough to be a growth investor, and we kind of didn't like it as much. And we focused on seed Series A, and that's kind of what we've been doing now ever since the first fund.
And so in Fund 2, which year was this? Which vintage?
Fund 2, I don't know if you know, but actually this is before your time, but between 2001 and 2010 in Europe, I would say 75 to 80% of all the VCs were active when we started were gone.
Yeah.
They literally were gone from the market.
Clear winter.
Yeah. Benexi Ventures, Pawn Ventures, Atlas Ventures, Dr. Neuhaus, Wellington, all these guys that were very big players in 2000, 2001, just kind of went out and left the market. And so it was kind of a last man standing business for a while.
So how do you manage to raise Fund 2?
So we raised Fund 2 on the back of two companies, Endeca, which was a U.S. structured search company that we backed this amazing entrepreneur named Steve Papa. And that thing just kept growing and growing and growing. So HBS guy, fantastic company, and Shazam. And on the back of those two companies, our investors had faith to give us the money for Fund 2.
Which was
and actually at the last minute on Fund 2, we had the family office of Jeff Skoll come in for a big check, which was fantastic. So, and the Fund 2 was actually exactly the same size as Fund 1.
And you changed strategy? So you focus only on seed to A?
Yep, seed to A. And then that fund has done pretty well. We invested in companies like OLX. We did companies like Datanomic. We also did Vinland, although Vinland didn't turn out that great in the end. We actually made 3x at the IPO. Also did Partnerize and Recarga, which are still in Fund 2, which also tells you how long this business takes. Yeah.
Mistake. And then you moved on to Fund 3.
Yeah, Fund 3, which you were lucky enough to invest in.
Yes.
Kaisha, that fund was a 2012/14 vintage.
Yes.
It took a lot of time to raise. We were at 70 million all the way till April 2014. And then between April and June, we actually doubled the size of the fund to 144 million. And that fund was phenomenal. The reason we doubled it is
like in 5 million or something like that.
Yeah. I think it was actually a little bit less than that. I think it was 3.
Maybe 3.
But that fund had Auto One. That fund had Quandu. That fund had Purplebricks. That fund had Remitly, as well as a lot of other companies. So that fund was 144 million euros. We've already paid back cash 4.6x on that fund. So that fund has been a phenomenal fund for our investors and for everyone involved.
Yeah.
And on the
I
back,
I should have had carry on that investment, huh?
Yeah, that would have been a good thing. Carry on that fund would have been a good thing. Well, your old guys have just re-upped in our fund 6, so I guess they were very happy with that return, which is great.
And so and how did it evolve from that fund? You kept on increasing the size of the fund, strategy a bit?
Not too much. Fund 3 to fund 4, so it went from 144 to 200 million. And that's a good size fund. In fact, that's the target size funds that we raise in general. And that fund has some amazing companies like Cognigy, like Yassir, et cetera, Leapwork, et cetera. So that fund, unfortunately, COVID actually hit a few companies in that fund. We had 2 travel companies that basically went down 95% during COVID, and then one jobs marketplace, which also got hit. Both of those, or all 3 of those companies, are actually up to higher revenue than they were, pre-COVID, pretty quickly within 2 years. And so that fund 4 will probably take a little bit longer.
Yes.
However, I think there's some great companies in there. It will just take more time. Fund 5, phenomenal start. We had a company called GoStudent. We invested at a 20 million valuation. It raised money at 3 billion within 18 months after we invested. Unfortunately, I would say it was a victim of that sort of 21, 22 momentum. Expanded in too many markets, too fast. Unit economics were not strong enough. And then over the last 2 years has basically shrunk into now what is a very profitable company, market leader in Europe in the tutoring space, and now heavily into AI. We think AI will be a very big factor in education. So
for sure.
I'm still very optimistic of GoStudent, amazing management team. I mean, Felix and Greg are 2 of the best guys. It's unfortunate what happened in terms of the market collapsing, but these guys will figure out a way to turn that around.
Very good. And so what are the differences that you see now between the entrepreneurs that are, good now and the ones that you would see back in the last 10 or 20 years? Are there major differences, or is
the one thing is they're just a lot younger. And that's something I definitely recognize now. I mean, I used to be the young guy at the conferences, and now
you're the dinosaur.
Yeah. Well, I wouldn't say that. There's a few other older guys. Actually, some guys my age that look a lot older than I do.
Yeah.
Or even younger ones. So I'm lucky. I don't actually look my age, which is great, but definitely younger. I would say, the market has shifted. 10 years ago, we saw lots of B2C, lots of B2B marketplaces. And now today, it really is 85% B2B, deep tech, very different market. I think it requires a very different skill set as well. I don't think a lot of the people that were investing 10, 15 years ago have the skill set to invest in this deep tech stuff. And so we've actually had to change a little bit our approach and the types of people that we're hiring that, really understand this technology, because I think it's very important.
But do you think the entrepreneurs themselves are different in terms of they're more deep tech, they're more, we would invest in maybe people doing apps, right? And now it's just the type of entrepreneur is different also.
It is different. And they're young people, they're adapting to what is apropos right now. So I don't think they're different. It's just we're different because we grew up with different types of companies that we're investing in. And so we all have to adapt. And I think everyone's trying to get their head around AI. So we've kind of made a conscious decision within AI. We're not going to invest in hardware. We're not going to invest in LLMs. But where we're going to invest is really at that application layer.
Of course.
And we've been investing in sort of, application layer machine learning since we started DN. So we're quite comfortable with this market. And we've actually done quite a few investments in that space, like Cognigy, like Unique, like Evidently, like Hawk AI in Germany. So we're quite confident. I think we have a very good team to address that market.
So you have portfolio companies in which countries nowadays? You're based
Oh,
in London, but I mean, you've always been strong in Germany
yeah.
and
So
other places.
two-thirds of our strategy is Europe, one-third is US, UK. And within Europe, Germany is our number one market so far. But we also have investments in Sweden, Switzerland, a little bit France, Spain. And I'm actually quite interested in Eastern Europe. So I think we'll see some interesting stuff come out of there as well.
And have you,
And Portugal, of
and
course.
Portugal, of course,
And I'd love to do a deal here because I love
finally doing something together. And have you noticed, the growth in the European sort of ecosystem? Do you think Europe has caught up in terms of at least quality of the startups with the US or not really?
I think there's definitely been improvement. I never like this comparison of Europe versus US. I think it's unfair. I think Silicon Valley has such an advantage over any European city based on the density of talent, for sure, and the experience and the deep bench of, venture capitalists that have been doing this forever, and such a serial entrepreneurship mindset and access to capital, which is just on another level. You could never replicate in Europe. So I don't like the analogy, but I think Europe itself has really grown tremendously. I mean, you know, the 15, 20 years ago, you had one unicorn company, sort of Flutter and Skype. And today you have over 250 unicorns, maybe even more now since I last saw the data. So I think Europe's doing just fine. And I think, you see evidence of this with Sequoia, Lightspeed, Bessemer, all opening up offices here.
Right.
General Catalyst also. So I think the market is there. Those days when, in Berlin, it was just us, Holtzbrink, and Early Bird. Today, I think almost every firm has an office in Berlin, and largely as a result of companies like Auto One, like Zalando, Trivago, et cetera, and we're very happy to have been early backers of those companies.
Right. But do you think it's mostly a question of the tech itself where there's a difference, or is it more the capital and the access to capital between
Um,
US and Europe?
I think it's both. I think if you look at all the LLMs coming out of the US, that sort of ecosystem of deep tech talent that comes out of Google, comes out of Salesforce, comes out of companies like that. You don't quite have that here. I think you have pockets of it, but nothing of the
Scale and
not the
density, of course.
of Silicon Valley.
And what about the exit markets?
So I think exit markets are sort of like buses. They all come at once. And I think, that period of 2019 to 2021 was a phenomenal period. We had over 10 to 15 exits during that period. We had 4 IPOs that altogether had an enterprise value of 19 billion in 2021. And so that happened. And, the key to this business is you have to keep investing through cycles. And so when you have an exit market like that, you have a right portfolio.
You take it.
And you unload.
You unload.
People that did not unload in 21, I'm sorry, but you're just greedy.
Yes.
Because the multiples are great. You could see it in the PE ratios on the stock market. It was a clear sign to sell, and we did. And we're very happy that we distributed over 700 million to our investors during that period.
What's your view on the next cycle? Where do you think we're at?
Wow, this changes by the week these days, right?
By the hour.
Yeah, well, this week's a good week. It looks like the U.S. has got trade deals together with China, the U.K., and a couple other countries. Stock market's up. So I'm cautiously optimistic about the markets and in general. I think the U.S. economy is obviously critical to all of this. And it looks like the inflation figures are down, markets up. And then, hopefully there'll be some interest rates coming down in the next couple months. And then I think that's very positive news to the economy, which I think obviously we're all affected by.
So you think that maybe we'll have another IPO window next year? Because probably not
I would hope
this year.
so. I mean, everyone expected it to happen this year. Clearly, the whole fiasco we've had the last 4 or 5 weeks did not help because there's too much uncertainty in the markets. So markets don't like uncertainty.
Mm.
If we get back to certainty in terms of trade, in terms of economic performance, I think it's very likely the markets would open. But we got to see, we got to see that data.
Yeah. Let's go back to fundraising before we go and touch on sort of entrepreneurship. Well, you have institutional investors and family offices. There's also a huge difference between Europe and US there. But do you think is it better nowadays? I mean, it's obviously much easier to fundraise than in 2020, in 2001, right? But do you think things have progressed enough in Europe in terms of availability for funds to access capital?
I think there's definitely more work that needs to be done. You have a lot of pension funds in the UK and Germany that don't invest in venture. Also here in Portugal as well.
Here, there's not even pension funds, so
Okay.
very few.
So the rest of my case, I think the U.S. market with endowments, with pension funds, all that is just, it's on a different scale. That being said, I see a lot more U.S. investors looking at Europe, and that's a positive sign. So it's definitely improved. I think, when you talk about, fundraising in general, I'd probably say 2024, 25 have been some of the more difficult periods I've seen since I've been in business. I'm seeing certain funds decide not to raise a new fund and just kind of either just phase out or maybe just wait a couple of years to go out and raise another fund. So I think it's a challenging market out there. That being said, I think it's a super interesting market to invest.
Sure.
So if you have the capital and, the deal flow is very incredible. And also what's happening in AI is just going to create some amazing companies. And so you don't want to be out of the market during this period.
So what about entrepreneurs? You've seen all these entrepreneurs and all the success stories across Europe and the US. What would be your sort of major lessons learned in terms of how to be successful? What should entrepreneurs do, not do?
Well, I think, just from my perspective, trust your gut on the first meeting. I've often met entrepreneurs and sort of thought, not sure, and then fell in love with the numbers.
Right.
And I think I would have been better off if I just trusted my gut in the first meeting. And then on the flip side, trusting my gut when, I see someone and girl or guy that I think is just amazing. And, just backing these people like Fabrice Grinda, like Philip McGean, like Felix, etc. These people they're unique people. And I think there's a pattern recognition you get that after you've been in this business for a while, that you see that talent, you need to jump on it because, everyone else is going to want to back them as well. So it's being able to figure that talent out quickly. And then obviously, the team will do the due diligence on the market and the numbers, all that stuff. But when you get that feeling, you have to move fast on it.
So it's more about really the people rather than, relying on the numbers only because the right people make the numbers happen at some stage, right?
In real estate, you have location, location, location. In our business, it's people. Because,
Founder.
good people can pivot. They can hire good people. And the flip side, when you get it wrong.
That energy that you see, right? Not the bullshitting energy, but that energy of getting stuff done, being passionate and just getting it done.
Absolutely. And their ability also to attract high quality talent next to them, I think is critical.
Yes. High quality capital and high quality people.
Absolutely.
And what are the sort of the stuff that when you have one of those meetings that you think this doesn't make any sense? What are the things that sort of put you off immediately?
Oh, there's so many things, but
we're kind of trying to see things
negatively. When people are just focused on money as opposed to winning. I think, the good entrepreneurs really want to own a category. And like a Fabrice with OLX, I mean, he just wanted to win. And
it was not all about valuation and percentages and dilution.
No, but the good entrepreneurs are always, they're not cheap. No. The good entrepreneurs are always fully priced. You're not going to get a deal which makes sense because they're
Of
really
course.
good and they have options and they're super smart. So you're not going to get the best deals on the best entrepreneurs, but you have to pay for the quality.
Of
Yes,
course.
you have to pay up.
Because our industry is all about quality.
Absolutely.
And what else? What else do you think are things that really stand out as do's or don't do's in those initial meetings with people like us?
Oh boy, there's so many things. Obviously, I look for the body language between them and their colleagues, seeing how they interact together. I like to have dinner with the people and see what they're like together in a social environment as well. So I think spending time with entrepreneurs, I think is key. I mean, you're going to spend 12 years of your life with these people usually, right? That's how long it takes to get out of these companies. So you really need to learn whether you like them and also respect them, and you think they're going to be able to pull off the job.
So you're a believer in being physically with people like us, right? I mean, because when you're just interacting over, a Zoom call, it's not exactly the same thing. It's not enough, right?
No, no, it's Zoom. I think is a good initial screen, but no, I really like to meet the people physically. Yeah,
And your team has grown considerably as well, right?
yeah,
At least since we've met. I think we've met like at least 10 years ago, more,
yeah, more,
12 years ago. We didn't meet at HBS, but we met
Investor
Investor
on the board of Investor.
on the board of
Yeah,
Investor, exactly. A dozen years ago, at least.
yep.
And but your team has also grown significantly. Do you have more senior people? Is your team more junior? How is it? What have you done?
No, I mean, well,
Yeah.
they all started very junior. In fact, half of them started as interns.
Interesting.
And we have a very active intern program. And so Thomas, who's now a managing partner, started as an analyst intern 13, 14 years ago. And so it's something I learned when I worked in Germany about those interns because we had not much big budget. So we would hire interns. And then the ones that were good, we would hire them full time. And I think it was a great way to see people in action. Also, I think great for them also to get to see the firm and whether it makes sense. So that's kind of how we've grown the firm. Yeah, I mean, we've had a very stable partnership. I think a lot of people have been around with us for 10 years plus, with the exception of Gulser, who we just hired last year to help support us in Germany.
Mm-hmm, mm-hmm. Well, then, it was great to see you here.
Great
Congrats
to
on
see
all the
you.
success.
Thank you very much. Great to be back in Lisbon, and I'll be back.
Great. Always happy to have you.
Cheers.
Cheers.